Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. In today's update, we're taking a closer and more grounded look at the developing narrative surrounding Iraq's economic future, particularly focusing on new investment activity in Najaf, tied to mineral resources, often referred to as white gold, along with broader claims about what this could mean for the Iraqi dinar's value and its potential return to global currency markets. There's a lot to unpack here, and while some of the commentary circulating online is optimistic, it's important to separate economic reality from speculation and understand what these developments actually mean in both the short term and the long term. The core of the news centers on Iraq's effort to move beyond what is commonly described as a rentier economy. For years, Iraq has relied overwhelmingly on oil exports, with estimates suggesting that around 90 to 95% of government revenue comes from oil. This heavy dependence creates structural vulnerability. When oil prices fall, government revenues shrink dramatically, limiting the country's ability to invest in infrastructure, services, and economic diversification. Because of this, Iraqi policymakers have increasingly emphasized the importance of developing non-oil sectors, including agriculture, manufacturing, tourism, and now more prominently, mining and mineral extraction. The reference to white gold in Najaf is particularly interesting. In this context, it typically refers to high-value minerals such as silica, which is used in industries ranging from glass manufacturing to electronics and even renewable energy technologies like solar panels. Silica, when processed to high purity levels, becomes a critical input for modern industrial and technological production. Iraq is believed to have significant reserves of such materials, but historically, these resources have been underdeveloped due to years of conflict, lack of infrastructure, and limited foreign investment. What makes this development noteworthy is not just the presence of the resource itself, but the increasing attention from investors and policymakers toward unlocking its value. If managed effectively, mining projects in Najaf and other regions could contribute to diversifying Iraq's revenue streams, reducing reliance on oil, and creating jobs. This is a key structural reform that international institutions have encouraged for years. Economic diversification is not just a policy goal. It's a long-term necessity for stability and sustainable growth. Now, where things begin to diverge from standard economic analysis is in how some interpretations connect these developments directly to a potential sharp increase in the value of the Iraqi dinar. The argument being made in the provided narrative suggests that projects like silica mining are part of a broader foundation that could eventually support a higher exchange rate for the dinar, possibly tied to a return to international currency markets. Let's examine that carefully. It is true that a country's currency strength is influenced by the overall health and productivity of its economy. When a nation diversifies its exports, increases industrial output, and builds a more balanced economic base, it can strengthen its currency over time. However, currency valuation is not determined by a single sector or project. It depends on a complex set of factors, including monetary policy, inflation, foreign reserves, trade balance, fiscal discipline, and overall investor confidence. In Iraq's case, the central bank has maintained a relatively stable exchange rate policy in recent years, with the dinar trading in a managed range against the US dollar. The current level, often cited around 13.20 dinars per dollar in official contexts, reflects a controlled monetary environment aimed at maintaining stability rather than pursuing rapid appreciation. The suggestion that Iraq could easily sustain a significantly stronger exchange rate, such as levels seen decades ago, requires careful scrutiny. Historical exchange rates from periods before major conflicts and sanctions cannot be directly compared to today's economic conditions. The structure of Iraq's economy, its population size, fiscal obligations, and global financial integration have all changed dramatically since that time. Moreover, the idea that the dinar is being intentionally held back is a common narrative in speculative discussions, but it is not supported by credible economic evidence. Central banks typically aim to maintain stability, control inflation, and support economic growth. Sudden and large revaluations of a currency can be disruptive, harming exports, destabilizing markets, and creating inflationary pressures if not carefully managed. Another point raised in the narrative is the concept of the dinar returning to global foreign exchange markets in a way that would trigger a significant revaluation. It's important to clarify that the Iraqi dinar is already traded in certain international contexts, though it is not a fully freely convertible currency in the same way as major global currencies. Any move toward greater convertibility would likely be gradual and tied to broader financial reforms, including banking sector modernization, anti-money laundering compliance, and integration with international financial systems. From a realistic standpoint, developments like mineral investment in Najaf should be viewed as part of a long-term economic transformation, rather than a short-term trigger for currency revaluation. These projects can enhance Iraq's economic resilience, attract foreign investment, and improve the country's trade balance over time. All of these factors can contribute to currency strength, but the process is gradual and depends on consistent policy implementation. In the short term, what this news signals is a positive shift in economic strategy. Iraq is actively exploring ways to expand beyond oil, and that is a constructive development. For followers of the Iraqi dinar, this indicates that the country is taking steps toward building a more sustainable economic foundation. However, it does not imply any immediate or dramatic change in the currency's exchange rate. In the medium term, if projects like silica mining are successfully developed, they could begin to generate additional export revenue. This would help diversify foreign currency inflows, which is an important factor in supporting exchange rate stability. It could also encourage further foreign direct investment, particularly if Iraq demonstrates that it can successfully manage large-scale industrial projects. In the long term, sustained diversification, combined with improvements in governance, infrastructure, and financial systems, could strengthen Iraq's overall economic position. This, in turn, could create conditions where the currency gradually appreciates or becomes more widely accepted in international markets. But again, this is a process measured in years, not weeks or months. It's also worth noting that investor expectations play a significant role in how these narratives spread. The idea of a sudden and substantial increase in the value of the dinar is appealing, but it's important to approach such claims with caution. Responsible financial analysis focuses on fundamentals, data, and realistic projections, rather than speculative scenarios. For viewers and followers of Iraqi dinar developments, the key takeaway from this news should be one of cautious optimism. Iraq's move to develop its mineral resources is a positive sign. It reflects a broader recognition that economic diversification is essential for long-term stability. However, linking these developments directly to immediate currency revaluation or specific exchange rate targets is not supported by credible economic frameworks. As always, it's important to stay informed through reliable sources and to understand the broader context behind the headlines. Economic transformation is a complex and gradual process. While progress is being made, it requires time, consistency, and effective policy execution. That brings us to the broader perspective. Iraq's economic future will likely be shaped by a combination of factors, including energy markets, political stability, regional dynamics, and global economic conditions. Mining and industrial development can play a significant role, but they are just one piece of a much larger puzzle. In conclusion, the emergence of mineral investment in Najaf highlights an important and encouraging shift in Iraq's economic strategy. It underscores the country's potential beyond oil and points toward a more diversified and resilient future. However, expectations regarding the Iraqi dinar should remain grounded in economic reality. While long-term improvements in the economy can support currency strength, there is no credible evidence to suggest an imminent or dramatic revaluation tied to these developments alone. Thank you for watching. If you value clear, responsible, and factual updates on the Iraqi dinar and Iraq's economy, make sure to subscribe to the channel and stay informed. And as always, this content is provided for informational purposes only and should not be considered financial advice.